Hi, everybody. Welcome back to another edition of VCTV. We've got an exciting conversation, a packed house on today's panel to talk about a very, very, very important subject, and that is global capital markets, but more specifically, SPACs. We know that 2020 showed us a whirlwind of SPACs. This was a vehicle that many companies used to go and list on public markets to take money from those within a global capital market, whether that be on those here in the US or in others around the world. Now, SPACs are not new, as we're going to learn, but they are becoming a very quick trend for companies that are looking to do fundraising, again, in the public markets as well. And this is also an important conversation to have as we have Coinbase, along with many other companies, preparing for their upcoming release to the public markets here in the coming weeks as well. So stay tuned for that. We've got a lively discussion, but first and foremost, a big thank you to tuning in. Make sure that you like and share today's episode. Check out the archive on LATOKEN.com to hear from today's speakers and all speakers of the VCTV family from around the world as we bring investors to break down different technologies, industries, and regions around the world for you, whether you're on the investing side or the building side as entrepreneurs. Now, the comments box is live and open. So if you've got any questions, got any thoughts, you want to say hi, drop them in there. We'd love to hear from them. Any questions you get, I'll do my best to ask them in real time. If not, we'll save them to the end, or we're all available afterwards as well. Also, a big thank you to the LATOKEN team and to Maria for making today's episode of VCTV possible. I'm your host, Kyle Ellicott. Let's go ahead and jump in and introduce today's guest. Gianpaolo, welcome back to the show. I'm going to kick it off with you first today, a quick introduction and background.
Thank you for having me here, Kyle. Welcome, everyone. This is Gianpaolo Parigi. I'm a venture capitalist. I'm a principal and president of International Capital Market with a California-based group called ACC. I'm also the chairman of the New York single family office, and I got several different ventures in the tech space. Happy to be here and welcome all of you again. Back to you, Kyle.
Wonderful. Happy to have you here as well. Mark, welcome back as well. A little background and introduction, please. Oh, Mark, it looks like we might be having an audio issue on your side there. We'll give you a minute to check that out. Ariel, welcome to the show as well. A little introduction and background for everybody.
So hi, everybody. Thanks for having me. I have recently been part of a SPAC of $250 million that we just listed in NASDAQ. Also, GP, the company which I was part of, did a first SPAC back in 2017 of an enterprise value of almost $1 billion. I'm today based on Israel, creating another VC from scratch. So interesting things, and happy to be here.
Wonderful. Excited to happy to have you as well and to hear more about your experience. Shala, welcome back to the show as well. A little intro and a little background for everybody.
Yeah, hi, everyone. So I have a family office, and I've been investing in tech and public companies for about 22 years. We're listing about 4 SPACs with a total corpus of around 1.6 billion, really focused on fintech, blockchain, and its convergence with the traditional markets like mining and hospitality and real estate. And so the partners I have with me, they've done over 30 SPACs, probably a total of around 25 billion of listings. So looking forward to talking today and getting to know everyone and talking about the subject matter.
Wonderful. Well, welcome back. Excited to dive into that, especially the fintech blockchain convergence and how that may play a role in the future of SPACs and digital exchanges as well. Kevin, welcome back to the show. A little intro, a little background for everybody.
Sure. Yeah, in fact, I think it's my first time to be on this show, but appreciate very much for the invitation. So I've been on Wall Street for about 20 years at Morgan Stanley and a couple of other investment banks. And we started our own firm 7 years ago. And right now I'm running one SPAC, a healthcare SPAC. Essentially, we focus on telemedicine, medtech, etc. I would say technology related to healthcare. In addition, we're involved with multiple other SPACs. One is a fintech SPAC that I sit on the board, and another financial data SPAC, etc. So we are very active in the SPAC space. And lastly, I'm also an adjunct professor at New York University. I've been teaching there for 9 years, and for the last 3 years, I've been teaching fintech. And all you guys are welcome to connect with me, and look forward to the conversation today. Thank you.
Yeah, absolutely. It's going to be a great conversation. It looks like we may have lost Mark, so we'll come to Valentin next, our CEO, who has joined us today for such a lively discussion. Valentin, a little introduction both on yourself and maybe LATOKEN as well to the audience. Valentin, we have you muted there, so apologies. Looks like there's, there you go.
Okay, thank you. You're right, you muted me. I told too long story. So I'm very happy to see you at our VCTV. So we had offline blockchain economic forums, and pandemic moved us online. So now our shows are seen 10 times more viewers and investors real time, and also the 100 times more viewing it afterwards. And I think that entire planet moved online, and it erased geopolitical borders and opened new markets. And that is why NASDAQ is so high. That is why the SPAC issue is so hot. So America prints money, which comes to these SPACs, which comes to these NASDAQ companies to acquire users worldwide who were pushed here this pandemic. So today is a very, very new moment in tech companies development. That's why we are happy to host the show. And LATOKEN, and I am as the CEO of LATOKEN, as a digital asset exchange pioneering digital capital markets. Very interesting to learn how SPACs and other companies can be tradable worldwide. And this SPAC procedure can last 10 times or even less, 10 times less. So thanks a lot for coming there. Kylie, please go ahead.
Wonderful. Well, thank you again, everyone, for joining today. Also, again, audience, feel free to drop questions, comments, say hello. We see a few different people saying hi right now. Feel free to say where you're at in the world as well, and we'll do a call out the best we can. Kevin, let's start with you. I mean, you've created a SPAC, you've sit on the boards of SPACs, you've been teaching fintech for the past 3 years. Give us kind of a lay of the land as to what this, again, SPAC environment really is here now in 2021, after we saw a big boom in 2020 that does not seem to be slowing down here in this year.
Sure. Yeah, SPAC was created by 2 NYU alumni in 1993. And now, I would say SPAC is probably version 6.0. So the SPAC of 2021 is very different from the SPAC of last year or the year before. And basically, it's really, a democratization of investment process, right? People in the past, they cannot participate in early stage, or I would say growth stage companies. It was VC only. And, when they go IPO, the valuation is already very high. And SPACs basically allows a lot of participants and created more, I would say, the liquidity for the whole market. I would say it's a very good thing. And also it's a disruption. It's a disruption to the existing Wall Street IPO process. And this year, more than 80% IPOs are done through SPACs, which means that it's really more mainstream than the traditional IPO. And I think, we encourage this. Yeah.
Yeah, I think you're right. Inshallah, I would like to come to you for any additional comments to add on to Kevin. But in general, I mean, you and your team, and we spoke about this subject about a week and a half ago here on VCTV as well. I mean, you've done over 30 SPACs with you and your partners right now. You're looking at these different industries. Anything to add to Kevin's, beginning of what this ecosystem is, but more importantly, what's the impact this has on companies, capital raises, and global financial markets going forward with over, about 80% or give or take of companies looking to do that?
Yeah. Well, I think that this phenomenon is really accelerated by the printing of money. I think Valentin had mentioned that before. And as an economist, I'll just simplify it with a metaphor. Printing of money is literally like creating a river, right? And you have, the river always looks for alpha, and the river is gigantic right now. All of the money that's being printed is ending up in a large part at the moment into the public markets, really through institutions that manage the money for banks, for example, which has now created this gigantic pressure cooker for banks that are managing money or asset managers where this money is ending up in the United States to find additional alpha for their client base. It's becoming very heavy, and the traditional let's say platforms like real estate, they're all shut down at the moment to a great degree. And this is what I think initially caused this explosion to happen. And the platform that SPACs are built on allows that democratization to actually allow some of this capital to now come off of balance sheets in one way and reside in another area where there's not deflationary pressure. So there's no negative pressure. Also, you see a great amount of value that is multiples, that is way beyond the rational value in a lot of companies. So there is now space in the public markets, like especially NASDAQ, for companies that traditionally would have gone the C or D route in venture capital, or would have been held on longer by private equity, to be able to realize, greater value on the IPO markets. And I think that's what's also created this movement, to not do another VC round, but to go to the public markets because they're open enough. And I think that's very exciting. And then for me, obviously, connecting that to the blockchain world, to the digital asset world, is a great opportunity, and it accelerates that entire environment as well, and creates bridges between that environment and institutional investors that want to get involved and cross participation. And there's so much, open-mindedness right now by institutional investors, and the promoters that are sitting in SPACs are able to make those decisions rather than Wall Street investment banks that have been the gatekeepers, which is what we find very exciting as investors. It allows us to innovate and kind of, to a degree, allow SPAC promoters and sponsors that want to, be a part of a sort of an entity going forward to take the place of VCs and private equity guys.
So this brings up a great question, because you mentioned sponsors and people wanting to be a part and kind of making that replacement as well, which before I ask my next question, Gianpaolo, do you have any thoughts to add on to just the ecosystem of SPACs and what this all means for today? Gianpaolo, looks like we may have lost you, so I'll come back to that. So Shala, you mentioned this replacement, sponsors coming into SPACs.
I had trouble hearing you, what you asked me.
Oh, no worries. So
we broke up when you asked.
No worries. Give one second. We'll let the internet catch up. Okay. So anything to add on to Kevin or Shala's points around, what the SPAC environment is today and what it means for capital markets? And then Ariel and Valentin, I have a question for you coming next. So Gianpaolo, anything to add?
Yes, I think, it's another weapon in the arsenal of the capital markets and of companies that need to raise funding. So like any other type of weapons, per se, it's neutral. I would like to caution the market, because, we have seen sponsor making a lot of money for sure, and FD returns. I am not so sure whether the retail investors at the back end of the SPAC may have the same type of preferential treatments. In fact, they have not. In fact, only 30% of the SPACs have been post-merger producing the type of significant returns that have made the other ones extremely wealthy, if not filthy rich. Also, to cool off, the atmosphere a little bit about this gigantic hype, I would like to mention two things. At first, this year, February to March, we have seen the first bump in the road, and the fact there's been a significant drop-off in the number of SPAC attempts being brought to the market first. Second, last year, the acting chairperson of the SEC, who is an attorney you know very well, Alison Lee, already declared that there's a little bit too much hype on the SPAC market, especially in light of what the expectations are when you match them with post-merger returns. Why am I raising these apparently contrarian views? Just because I want to illustrate to the companies out there, because I think one of the main features of LATOKEN VCTV as a channel is to, if not educate, at least be an eye-opener for companies that have to orientate themselves in the jungle of different products, system, and methodologies that we do use every day on the capital markets. And there's a lot of glossy, from the outside, but definitely the SPAC as a quantity at the moment have all the features of a bubble. Like Shaval said, there has been a lot of liquidity that has been, the result of the COVID pandemic, united primarily to the quantitative easing that the central banks have been continuing to do, also as a result of the previous economic crisis of the last decades, and even more so of the pandemic. People sitting at home and having nothing to do, they've been putting a lot of money into these vehicles. Whether or not it will continue like this, and whether or not this is a sustainable process, only the markets can tell us, and we will see. But again, I would like to bring a word of caution for the business owners, for the founders out there that are probably considering whether a SPAC for them is good or not. And again, I think we have to get into the merit of the individual cases, but at face value, the SPAC has a lot of favorable items compared to a traditional IPO. But at the end of the day, the devil is in the details, and at the end of the day, it is not so difficult to raise the capital, although raising capital per se is already problematic, but it's difficult to perform sustainable results across protracted horizon of time. And this is this challenge. And so I think, probably it's a little bit too early to draw a line and say whether or not the SPAC have been good or bad. As I say, they could be like IPOs. It's talking about IPOs and saying IPOs are good or bad, that per se is not even a question that has really a great merit. I think it depends on the individual cases and on the individual applications of the system and the methodology that we utilize. So, as I say, as a former investment banker and a venture capitalist, of course, I'm in favor of everything that can, augment the financial inclusion and the democratization of the market. So this is all on the plus side. On the minus side, we are seeing that the retail market is actually, suffering from the performances of the SPAC. And anyway, don't forget that because of the structure of the vehicle, if within a given time frame the SPAC has not identified and closed on a business consolidation, it has to return the capital. Yes, of course, with a modicum of interest on the principal, but obviously it's like ending up on a dead end and having to backtrack as an investor and go to other investments. So per se, it is not the panacea, is not the system that everybody outside of the financial market possibly has imagined it to be. It's just a good instrument. It has a lot of pluses to its own merit, but again, it will have to pass the test of time. And for sure, a couple of bubble bursts, and one is probably quite close. Thank you.
Thank you, Gianpaolo, and have some questions to follow that. But Ariel, I want to come to you next. I mean, you've created a SPAC, you've fundraised, you've gone through this, and a $250 million SPAC that you were a part of. As Shala had mentioned, sponsors taking that replacement of VCs. How was some of your experience putting that SPAC together, raising that kind of capital, and then seeing it through to the public markets and potentially beyond as well?
Sure. First of all, thanks for having me here again. I'll answer your question, then I'll rebate some things that were said here, which part of them I agree, part of them no. So I had the pleasure to be in the nitty-gritty of creating this SPAC. We were looking at companies in the US about how difficult it is to raise funds. I mean, it's not a big deal because it depends on the deal. Everything depends on the deal. I don't think SPACs are no different from any other instrument that's said here before me. They're just bringing a lot of companies that, in my opinion, would take them more time to reach the markets, or they wouldn't reach the markets at all, or weren't thinking about it, and just accelerate the process. And it brings more volatility to the market in the long term, which in my opinion is good. It brings a lot of companies which, as I said, come at an earlier stage to the public markets, and I think in the back end it's good to retail investors. But just addressing your question about how difficult it is to create a SPAC at an institutional level, I think if you're already an institutional investor which has your name around, haven't done some very big VCs or very large private equity investments, and you settle with good relationships. I mean, it's a matter of finding the right deal and then sourcing with available partners. There's no secret in creating a SPAC. Maybe seen here because we're in a hype cycle. It's something I don't know, something like bizarre, but it's not. So about that, the real process in this SPAC: first, finding the right target. Second, agreeing on the right terms, which is very important. So that's the major work on a SPAC, because you can try how much you want to find deals for a SPAC. Like any other investment, if your target is not good, you're gonna have a hard time doing that. So I want to address what's something that were given here before me. I mean, every time there is a hype on something, people say there is a bubble. People are saying there is a bubble on a Bitcoin for a long time. If it's going to crash to zero, I don't know. SPACs is not something new. They started back in the 90s. Reverse mergers, which is what can be forced SPAC, it's not new at all. I mean, everybody forget the New York Stock Exchange, Burger King, and all these companies did their reverse mergers. What we're seeing here, I'm not going to address the central banks, but yes, there's a lot of money in the markets, and this is a creative tool for companies to join the markets. And I feel that it's very, very good for companies to think about this. It gives a good price determination. It's something that gets out of the scope of the business, the traditional business of investment banks. It opens a new wave of investors to possibly take this company public. And something that is very, very interesting, a good SPAC is a SPAC that brings a team with expertise on that industry to help that company transition from private to public. And this is what actually we tried to build with the SPAC that we were doing. And in this sense, this is very valuable to a company. If it wasn't, companies weren't doing SPAC. So I want to kind of do a loop on everything that I said. First, like any market, like any trend, there is a hype and there is a consolidation. Yes, I think you cannot go on a growing margin here. There needs to slow down, SPAC, a consolidation. People understand now it becomes something extremely more mainstream. But I don't see the end of SPACs near. I see the instrument that will continue. It will slow down. Yes, maybe. I don't know when. But we will see. But I see this as a continuing trend. So that's first. Second, as I said, the benefits there are for SPACs. In my opinion, they massively outweigh the drawbacks. There are some drawbacks, I agree, like any other thing, and companies need to be aware, like Gianpaolo said. But I feel that a company which is in very high growth or is not thinking about going public meets the right investor with the good expertise, can make them very successful in the public markets way faster, therefore leveraging shareholder value and bringing great return for the founders and for the company itself. Last thing that I want to say before I pass on here to other speakers, I do encourage every founder to do your own due diligence about what SPAC is itself, okay, and be open to it. But be careful, like any other thing that people come to pitch you, finance people come to pitch you, be aware of it. I think the best thing founders can do is have 3 questions in mind. First, what's the added value? Don't look at capital. Capital, if you're a good company and you're growing, you're going to receive capital now or sooner. But what's the added value that these investors are bringing to me? And what's the value of the management team but taking me and what's their connections? And more important, what's their expertise in my business? What do they know about my business that can then leverage the public markets? Because a SPAC investor will accompany the company itself, will follow it, will be its partner, on and on. The second thing that partners need to be aware of is the clawbacks and the warrants within the SPAC. It's very important that I'm always talking about this, and founders need to be aware of that. Even if you're not, you need to get your legal team by your side, really be onto this. And the last thing is the price determination. SPAC is a great instrument of price determination. For example, in investment banks, they use puts and calls. They manipulate the market, and it's legal. But they manipulate the market after the IPO to do a funnel, so the price doesn't go too high, too low, and it stays stable after the IPO. That's how good investment banks preserve their value. This is good investment banks don't give a good volatility to the price. All that giant roadshow that comes before the IPO, honestly, in my opinion, it's not to raise money. It's just to make sure what's the right price to list the company so it doesn't go crazy afterwards. So here, SPAC is very useful. So the price that it's going to go public, it's something very important, and founders need to know this process very well. And yes, thank you very much.
Wonderful. Thank you very much, Ariel. And feel free to continue the conversation and comment anytime. So your time's not done. Don't worry as well. Any comments to Ariel's points? I mean, he shared a lot in that statement, but to all of you, I'm going to leave the floor open for a minute before we move on to the next question.
I think that Ariel started very good kind of case to give practical advice to entrepreneurs, to founders of companies, how to get listed on NASDAQ. Maybe Shahal can give some more step-by-step insights how to get into decent SPAC and get successfully into public.
Yep. Yeah. I mean, it's number one. It's the management team and the board. You have to have guys that can bring in targets, and you have to have a team that understands how to do the back end. The back end is very important, right? So the front end is very important because in order to identify the targets, and the back end is very important. So you have an execution team. It also helps greatly to have a very experienced law firm and an investment bank by your side in order to price things correctly. So everything Ariel said, I agree with. Gianpaolo also has made some great comments. I think at the end of the day, the way I look at it is it's a combination of 2 philosophers and 2 theories. The Thomas Hobbes theory of chaos, where you have a lot of people, running in and going crazy, and that chaos theory is really caused by the amount of money that was printed that banks and investment banks and asset managers need to put into certain categories, as I was talking about before. So there's this huge frenzy, and a lot of people, I think, initially when you see this huge SPAC explosion happen, did it because they were bankers, and they were bankers or traders, right? They want to trade the stock, and I think what's happened is a lot of those guys are going to get the Thomas Hobbes theory of chaos combined with the Darwinian theory of survival of the fittest, right? So not a lot of them. I think if they're pure Wall Street finance trader guys and they haven't really populated their boards and their management teams, with the right execution and transaction, people are going to feel pain, and it's going to happen, around month 12 to 16, because it really takes 5 or 6 months to do a deal and agree a deal, and really you don't have a lot of chances to close a deal if you mess up. And the big problem that I see there, talking about the risk that where we talked about, is number one, overvaluing a company. So a lot of guys, if they're pure financial guys, want to just give a great valuation. And this is a place where the SEC is going to investigate, because there are guys that have, unfortunately, and some of them are very famous guys, that you all know the name, and they've been all over the media as Silicon Valley investors, but they've given crazy valuations to companies. And I think that's a big risk. Even, having experienced people on board that just don't know how to price deals properly. And the SEC, I think, is definitely going to look at that. So the two risks are guys that, just did it for a financial trade and they can't find a target. They don't have the experience in M&A. They're pure Wall Street traders, so they're going to get killed. The people that are sponsors, that are short-term greedy, that are just going to overvalue companies to get a deal done and hoping that sticks. And there's no magic. I mean, these companies eventually will be valued in terms of their execution and their real and their real business. So what's key here is, I think the guys that will succeed have great boards, great management teams that either will help good companies at a good value go public, so then there's enough upside for the retail, right? Because if they're playing the same games as Silicon Valley private equity guys and VCs have done, which is you maximize all the value and then you dump it on the stock market, and then the poor retail guy gets nailed. I mean, that sort of a game, if it gets to the SPAC market, which I'm afraid may happen and is already happening, there's going to be some fallout. But the vehicle itself is fantastic for people that are able to find great companies around the world that want great liquidity and good value, because the positive side of all the money printing is we can actually have a golden age. We can have a golden age of innovation. We could have a golden age where the barriers to entry are not lowered, but they're expanded, so that other companies that would have been maybe shut out by the VC market, the private equity market, taking once again blockchain companies that maybe wouldn't have gone public, but with good teams and good business plans, they can, and maybe they'll get a cheaper amount of liquidity in the market so they could grow faster. These kind of exciting, projects, I think, have a chance with good SPACs.
Well, and I know Ariel has a comment, but just to add on to that, Shala, I mean, we talked about this before too. I mean, this is a new investment vehicle, very similar to the third exchange in Hong Kong. The Hong Kong exchange created a third exchange for companies that have little to no revenue, with also, I think, less than 99 investors in certain industries as well, to create those liquidity markets. And we're seeing more of this around the world, to your point, as well. So I think it's a great example of growth and maturity, or openness in some cases. And some may argue against that around the global capital markets, but it is a good vehicle. Ariel, you had a comment to add on Shala's point.
For sure. Yeah, I would love to comment on what being said. I think this discussion, I wanted, if I may, to take to a perspective that we are asking how can SPAC transform capital markets. It has transformed already. The question, in my opinion, is how can now entrepreneurs benefit from this transformation? By the way, SPACs, as I said, it's not something new. And combining what Shala said, I think nothing should change. I mean, how do you judge how do you judge how good is an investor? Go talk to the companies he invested before. If he did SPACs before, go analyze it, so that you don't fall in these pitfalls of people that are just trying to jump on the hype. If he's his first SPAC, nothing wrong with that. But go really talk with the bigger deal that he did, which bigger deals are very similar to SPAC. So I just wanted to mention that. The second thing is, I think, if I may, that we should swift this conversation, nothing that you can find online, which is, what is a SPAC? Is it a hype? Yes, the central bank, everybody know that this giant money printing. By the way, this conversation, I don't think it's relevant to what we're saying, because everything in the public markets is hyped. Valuations are not connected to reality anymore, and this process is just going to get higher and deeper to any public thing. Now let's take the SWIFT out of SPAC. Talk about an IPO. Talk about companies that were listed 20 years ago. Valuations are not connected to reality. This has to do with SPACs. SPACs is just one little thing on top of this big bubble. I mean, if this is real and everything could crash, let's just everybody sell out. Let's put some money on gold and Bitcoin. Let's go home. But the last thing that I want to comment, I'll give you back, is
Do you want to contribute to global macro discussion or to practical step-by-step guide how to get listed via SPAC?
Can I add
Adrian,
some of the comments?
Yes, real quick, just a second. Adrian, we are going to switch to why founders and how founders should get into that. I want to make sure that our audience is understanding the overview from the experts, you all, as to what's going on in the market. So now we're absolutely going to shift towards that, because this is an it is a good vehicle for companies, depending on industry and their expertise and interest, for them to look at the public markets. But Kevin, you have a comment to add, and then I do have a few more questions for the general group. Go ahead, Kevin.
Sure. Yes. I totally agree with what Ariel and Gianpaolo said earlier. And specifically for me, the value what we bring, right? In fact, I think if you look at what happened with SPAC market, it's totally related to what happened with COVID. SPAC took off right after COVID outbreak, right after the Fed cuts the interest rate to 0, which really forced people to go into the market. And also last year, the largest sector of SPAC issuance were in healthcare. Why? Because healthcare is a sector that basically had to go through a lot of disruption, revolution, whatever you want to call it. I mean, so many companies, started to do, hospitals started to do telemedicine. Why? Because the physicians we work with, they're afraid. The physicians, when they see patients, they might get infected. And many of them, New York City, more than, I think, several hundred physicians and nurses died from COVID, right? So the whole healthcare, I would say, the sector took off, I think, because of COVID. And, we are, like many other SPAC companies are trying to do deals, and hopefully it will be contributing to the betterment of the society. We bring, physicians, I think Ariel earlier said that for a lot of companies, they need industry experts to help them. And that's the value we bring. It's really not about the capital itself. And at the, zero interest rate environment, the capital is everywhere, but the talent, the expertise is very rare, basically. Yeah.
Yeah, and opening up those capital markets and capital opportunities is a huge deal, which actually leads to a good transition to the question I have for Valentin. In terms of SPACs right now, these are on public markets and traditional public markets. A lot of activity again here in the U.S. at the moment, but this is global markets. As Kevin just mentioned, 2020 accelerated the market in various ways. Now, as we're seeing this digitization of everything, is there a chance that things like SPACs or a version of them come to digital exchanges as well? I mean, is this the next wave that 2021 will push us ahead, that we'll start to see this new funding vehicle type maybe come to digital exchanges? So Valentin, I'll come to you first, and then I'll come around to a few others who may have comments as well.
I wanted to hear first experienced in SPAC guys. So the small hint is that there are some kind of IPOs are already going on digitalized exchange. They are called initial exchange offerings, and they are now done mostly by startups who issued their digital assets. It's mostly cryptocurrency, and place it immediately publicly via exchanges like LATOKEN. We are one of the largest markets for primary placements. Do we need an additional vehicle like SPAC? I'm not sure. That SPAC is something which is already listed, and cuts is a shortcut to decrease regulatory and other costs. And also there are people who are interested to push it to public market. And I'm actually more interested to learn how it works. Shahal, so as I know, you have several SPACs, right? You have some SPACs which are actively searching for targets. Is it correct?
Yeah, no, exactly. And look, some of the targets that we're searching for are exchanges and on the digital side. I'm a big supporter of blockchain and actually an alternative digital technology and financial system. And I was in the last meeting that we had, and I told Kyle that when I was buying the Plaza Hotel, I said I was going to tokenize it, and which caused a lot of people to wonder what is this new emergence that's going on with alternative markets. Just to answer a few questions, I think the idea of having a SPAC-like entity on a digital exchange is amazing. Actually, I've invested in a company that securitized an asset in the United States. It was actually a basketball player. On the last conversation I had in the last show that we did, I was really talking about the securitization of assets. Those have to be done on digital exchanges now for those to really start to gain value. And so I think, at least in the United States, I have a few friends that are applying for now regulated proper exchanges, like Reg M exchanges that are tied to the NASDAQ, for example, or other options exchanges, where you could actually take in not only cryptocurrency, let's just call it, or crypto assets, but also possibly through options contracts, investor money from institutionals. So that way you could actually, on a digital exchange, most of the exchanges today are like ATSs. They're like islands, right? They're just almost like currency exchanges between cryptocurrencies. But I think two things can happen. One is, a broker-dealer a partnership like the one that I've invested in has a very close relationship with the SEC and FINRA, and they issue and they go and they ask for an issuance, of a security within a company that sits on a security digital exchange that acts very much like a SPAC would on the NASDAQ. I think that's a very good innovation, and I think it will happen. Actually, learning about it right now, I'd love to do it, with some of my other friends and investors, and do it in the United States, because I think the crypto world, and I've been saying this a lot over the last few weeks, it needs diversification out of the store of value of Bitcoin. A lot of risks are there. If, for example, the SEC just says, you know what, we don't want Bitcoin on public balance sheets. I mean, it's all perception, it's all trust. Like what's happening on the stock market, like what's happening in the SPACs, and it's all human intuition and human trust. And if we start to diversify and create other avenues that are transparent, that are regulated, that allow this sort of a investment participation to also be done on the digital asset side, where people can move some of their value from some of these, digital cryptocurrencies into a assigned exchange, into an entity that will go out and now combine the let's just say the crypto wealth to go out and also invest in these asset classes through the digital currency. I think it's a great innovation, and especially if it allows in trading on the secondary markets, like I said, with participation from both sides, the institutional side and the digital side. I think that is an amazing innovation, and actually I would love to do it with somebody, and I'm game. I mean, I love that idea. Let's just do it, guys, on this call.
What could be what would be pros and cons for LATOKEN to consider SPAC? So, to my view, without kind of SPAC, we will kind of acquire 10 million users, 10 million wallets will be opened within a year. With SPAC, with a couple of $100 million, we can acquire a couple of 100 million users who paid users, those who transact in our digital wallet, on our exchange, on our payment service. And however, there could be some distraction from our organic way to grow. It will take some management capacity to deal with this. So is it a good idea to consider for us SPAC, or we should better take our 10 million users and then kind of grow more lightly?
Gianpaolo, I see. Yeah, Gianpaolo, you've got the finger up on the corner, so go ahead.
Thank you. Yes, well, to answer Valentin request, because this is then, the ultimate litmus test for methodologies. As I say, this is a new methodology that we have to go to the market and to raise, cash. But at the end of the day, the company is confronted with the boundaries of its own activity and with the decisions about different options, whether it is better, like Valentin says, to grow organically or to grow via additional acquisitions and tumultuous growth. So I think at the end of the day, the debate is not so much as on the merits of the SPAC, as much as what are the entrepreneurs like Valentin really need. And as I say, this is another instrument per se is neither good nor bad. It has a lot of pros, as we've seen, and some cons, like every instrument. But it doesn't resolve the going through the eye of the needle that every company has to pass. And the eye of the needle is to create the condition for sustainable growth. And every time you hear some entrepreneurs like Valentin says, thinking, that he has this type of questions, issues, and doubts, I think it's good. It's a good indication of founders being very sensible, very attuned to reality. And you see from this that at the end of the day, the decision on which instrument to take is a function of the strategic decision that the company has to take. And in that respect, the SPAC can be, one of the weapons in the array of weaponry. But we have to remember one thing, gentlemen here and ladies and gentlemen in the audience, that quantitative easing is basically having as the undesirable effect to embed inflation in assets everywhere. It's invisible, but it's embedded in assets. Yeah, we have a huge asset inflation. The huge asset inflation that we have is doing one thing, which is maybe and not immediately intuitive for people outside of the financial world, but it's pushing up the stocks. And around the world, stock exchanges are just growing as a result of this buffer of hot air that they have beneath themselves. Now, if you want to take a measure of asset inflation, look no further than the Standard & Poor's 500. And a company, to go back to the basics and the metrics that we need to consider, a company to be successful sustainably should be able to outperform the Standard & Poor's 500 on any given year. Otherwise, it would only consume itself till the point of exhaustion, so being taken over, wounded up, or liquidated. So the reality is, when you put the things in the context of the big picture, and I apologize if I had to go a little bit into economics, but we need to understand the territory in which we are making our journey as travelers. And, because we're not, unanchored, we are anchored to a reality, and the reality is what it is. Again, we have a plethora of solutions available, but then again, when the rubber meets the road, the questions like Valentin's question need to be addressed. And again, you see that the answer doesn't lie in whether or not I should use a SPAC or not, but how do I create the conditions for sustainable growth over a protracted period? A little bit like the unicorns, when the unicorns are formed, or even to go to the old world like a Berkshire Hathaway, that's creating value on a sustainable way for a protracted length of time. And I think this is important to keep our feet on the earth and address the the basics as always.
Just really quickly before the other guys come in, I'm sorry.
Shala, go ahead.
There are certain SPACs and certain founders that I know of, they're acting more as what happened in biotech, right? Biotech companies never had any revenue. There's a great promise of upside, and that's a bit of the healthcare, but I'm just attaching it to what Valentin said, because there's a lot of guys that I know, and I'm not saying I'm one of them, I may be, but that are looking at digital markets, especially the blockchain, fintech markets, as possibly certain places that we may take a little bit of risk with some of our SPACs. But these are not the SPACs that we have that are, 250 million, 500 million, SPACs. These are probably the 50 to 100 million SPACs, because you have to back it up with a pipe, and you have to bet, on the hockey stick. So it depends on the vehicle and the investor risk. But there's some biotech stuff happening on that side, on fintech.
Ariel, do you have a quick comment?
Yeah, I wanted to comment. A lot of things here was said. Listen, I studied physics, and what I like to breaking things to the most fundamental level. So, and I want to put here 3 things for us. First, listen, any conversation that we have about finance needs to include blockchain. I mean, it's not here. What's the future is going to include that. The future is going to be companies going public on the blockchain. By the way, blockchain and normal finance, not two different words. They're different. They are separate today, but they will merge somewhere. But here I'll say two things. If you are a founder with a already established company, okay, and it's coming soon in the next 1 to 3, I would say 4 years to do a public offering, I think your aim is to go to the public markets traditionally. And by the way, going through the needle, as an expression that was used here, which I love it, the fact that it's hard today and the system has problems, in my opinion, the system has many problems. One thing that is good, it's weeds out. There are companies that shouldn't go public. There are companies that there's a natural filter until a company becomes a giant unicorn. Some die in the middle, some restructure, you need to do a pivot, you need to change. So this difficulty, I think it's good. That being said, if you're a founder looking for the next 4 years, 3-4 years for going public or thinking about it, I think traditionally like specs are going right now, that's your route. Now, if you're founding a company today, or if you're still small and going to the public market is something that seems to you a little bit far, that has a lot of work to be done, then I assume that you should be very creative and understand going public on a blockchain, because you don't want to play with your baby of doing something which is not regulated. Because let's talk about the believers on blockchain. I also believe on blockchain, but let's not just lie to ourselves. You cannot stake the future of a company in a place which is unregulated with so many employees. That's just irresponsible. So it's going to be regulated, and it's good that it's going to be regulated. But then, maybe maybe instruments that haven't been born yet. What blockchain did so far was copy things that exist in finance. There are some innovation right there. The instrument that doesn't exist in normal finance at all. But what it did so far was to copy, and I think SPAC is going to go there. So that's a really like science fiction thing for us today. Like people in the 90s were talking about the internet. But if we do a replay to this conversation in another 5-6 years, maybe that's very, very reasonable. The second thing that I want to bring is the following. As Guillermo really said, beautifully said, the only thing that a founder should care is how can I increase the value of my company. If now you need, why do you even do a SPAC? Because you need a huge capital injection. How do I can lower my cost of capital, increase value creation, and also boost the leverages of value. I think this is not even a question for if that's being addressed and you understand that you need a capital injection. So I think SPAC is a beautiful investment. There are some exceptions of companies that I see don't go to SPACs, do a normal IPO. Companies that that have specific characteristics. For example, if a company now doesn't align, it's doing a new thing. It's giving a stage. It's big already. It's implemented, but it's doing a new thing. I think to do an IPO for what we have done, what we have seen is good. It brings a lot of uncertainty for SPACs. If you have a defined business model and just want to massively expand it, so I think a SPAC is a good thing. The last thing I want to break down in this conversation is, again, I want to reframe them. Valuations are distorted from reality, and the Fed's not signaling that it's going to change its zero interest rate policy. They're going to go to a policy of stagflation until it goes back, because if you need to do simple math, because if you keep printing money, the bubble needs to pop. But they're doing here a new economical experiment that never been made ever before. That they wanna inflate back to normal. They wanna do a stagflation back to normal. So we'll have to accept that this is the stock market as it is, and that's how it's gonna be. At least that's how the Fed say it's gonna be. So that's how we accept it's gonna be, because we're not the Fed and we cannot change it. So SPACs will have to live with that. That being said, companies do need to try high valuations, and not, I think, reasonably, they have to have fundamentals behind it. But if there's a high valuation for your company and there's fundamentals behind it, don't be scared there's a high valuation. Probably other SPACs that we've seen has huge valuations, because all across the board we see huge valuations. They're going to be, as I said in the beginning, they're going to be deflationary periods. They're going to be periods of corrections. and then that trend's going to keep going up. Here, just finishing my comment, sure. We are a small derivative of
we may have
here we are just eating a derivative of that, which is the behavior of the interest rate curve and the behavior of the macro level of the whole market is what we live in the SPAC market here. So I think founders shouldn't be scared that if you have a good company, and an investor reach out to you, so go for it. And if I saw founders already get scared that they have a too high valuation and thought that the company back in the SPAC didn't have enough experience or wouldn't pose a risk for that. I think that's a mistake. Make sure to back that valuation. Teach yourself a little bit of economics. Understand the distortion that's happening in the market. And it's not just because of your company. It's not just because the investor is crazy and he has a pile of cash and he's Warren Buffett and he wants to put it on you. It's because that's how the markets are. And so have that in mind and just live with that. And by the way, maybe we're using 4 words here, SPAC, but there's nothing new here. Treat this as any other investment you receive in your company, and you make a wise choice.
Kylie, I think
Ariel, thank you.
More frequently, so he has a lot to say. That's great, fascinating. Kylie, may I kind of overuse my SEO power and play some small game? So sure. I think it should be the people, they want some gamification, and as the entrepreneurs who want to kind of put their choice in a person who raise money via SPAC to try to understand. So, and I will represent this audience. So, imagine I'm an entrepreneur who wants to get listed LATOKEN via SPAC, and you kind of ask me some questions and persuade me not to do it. So, challenge this, all right? And I see the point that it's better to grow organically and have less bureaucratic and regulatory problems related with this SPAC and American regulation. However, we need ATS license. We need MTL licenses in America. So, and we need people with very high salaries, a lot of lawyers. Otherwise, we will lose America. That's could be my main argument why we need SPAC. And also, I would triple salaries for all of my teammates, and I will hire Goldman Sachs people and train them as a product managers so they can transfer the capital markets to new technology. That's my main points. Why I would kind of raise a couple of $100 million via SPAC. So can you please challenge this? Tell me why I shouldn't do this.
Sure. I'll address that question very objectively.
Give a word to other guys. So I get your point that it's good to enjoy less regulation in blockchain. I agree with this, but this is the year when crypto starts to eat fiat. They merge. So we want to be accessible to the wide audience and be regulated. So, guys, who have arguments to?
By the way, I'll pass to everybody. I just want to correct something that you said. I didn't say that's not being regulated. It's good that it's regulated. So I encourage you to be regulated. And second, every rule has an exception. So you got me by my Achilles heel, and congratulations for that, because that's awesome that you paid attention. So that's what I said is not for all the companies in the world. There are companies in markets that are kind of excluded of the American sphere. There are markets. There are companies, great companies in countries like East Europe, Russia, more in the Middle East, maybe Africa, which are excluded of the opportunity for SPAC. And these companies, they are already in a riskier area. So maybe going to blockchain. I'm just gonna leave that here because I wanted. I just want to clarify this.
I need some feedback from other people. Guys, please challenge these ideas. So we are acquiring something like 1 million users per month. We can acquire 10 million users per month if we kind of have this money and also enter America. Should I do this or not?
Yeah, guys,
Yeah.
I'll just make a very quick comment, Valentin. I can't see everyone because I don't know what happened with my computer. I hope you guys can see and hear me. But I mean, in one of the SPACs that I have, we're in the process of a deal in India, where it's a fintech bank, and it's just we just did the deal on the premise of their current base, and they have to be audited, right? So they have to have the ability to pass the GAAP audit, that's the U.S. audit. And what they're doing is that they're using the capital that we're giving to them at a much cheaper rate than they can get in India in terms of equity or debt, and exploding their business, and their microfinance business in India that is growing rapidly. In terms of your question about yourself, if you have the basics, like if you have the audit, that'll comply, and if your business is already running and it's just expansion, somebody like me personally, obviously after my CFO and other guys would analyze your books, and if you're able to do that GAAP audit, and if we see the growth, and the board believes so, and the pipe investors behind believe so, and the guys holding the corpus within the SPAC, have the confidence, then essentially my view is that an exchange like yours that is outside but also can participate inside, that has a certain amount of already a client base, is a very valuable fintech asset, right? And it could be valuable in the market. Just my personal opinion, but it has to be looked at. Are you ready? I mean, are you ready to be audited? Are you ready then to be on the public markets? And are you ready to be completely regulated and report? So that's just my comment. Yeah.
Kevin, Gianpaolo, any additional things that Kevin?
Sure. Yeah. First, I like to say that regulation is not all bad, right? Regulation is there for some reason. For healthcare, obviously, it's highly, highly regulated. It doesn't mean there's no innovation. In fact, last year, this year, we see incredible innovation in healthcare space, telemedicine, RNA, all the diagnostics, wearables, and all those. So I guess, for Valentin, for your, business venture, to leverage your capability, right? You don't, almost every industry now, I would say, is highly regulated. And to be a public traded company, yes, of course, you're going to get more scrutiny, right? There will be more public disclosure, but also it will raise your firm's profile substantially. To be a public traded company would make your, station to be a lot more visible globally. And I would say, add all the good and bad, I would say it's much more beneficial to be a public traded company. But of course, there will be more pressure on you too. You have the quarterly disclosure, you have to, have the board that is, fit into the independence rules and all those governance rules. Yeah. Mm-hmm.
So I think this is a matter of money. I'm sorry, maybe this is my naive view that compliance with regulation is about money. So, and if we have money, why not we?
Valentin, I think
Yeah.
Sorry, there's a delay.
Of course,
go ahead, Gianpaolo.
Yes, sorry. Of course, it's your call because it's your group. But definitely, I would say that it's important not to lose a vital market like the United States. So my answer is very simple. Yes, you should go for the US market, meaning that you should go through the ordeal on making your entity accepted and regulated according to the United States regulation. And also you would have to hire the qualified personnel to take care of the extra workload that you have to put on LATOKEN, getting more global. On the other hand, and this is the strategic consideration, you should go for it. How you go for it, whether you go for the capital raise via public markets or via private placements, it's more of a tactical considerations. You would have certain favorable, I would say, items on both, and some negative issues that you have to consider on both. But once you have taken the strategic determination, I think the decision on which tactical channel to use to raise the capital is important, but natural consequences of the strategic decision. So you should go for it, and because I think you don't want to give up having reached the same level of quality that you have recognized in your activity, you don't want to forego such an important market like the United States. So I think, if you ask me, I would go for it.
So I feel like SPAC mean 10 times bigger valuation than private investment. Is it correct?
It depends, Valentin, on who you're talking to, right? Because the sponsors are legally liable. I mean, if the sponsors have to agree on the valuation with you, you have to sit and negotiate with them, because if they just get a crazy valuation, which some have done, and I said that before, and the stock doesn't perform after it's listed, they're going to have to answer to a lot of upset shareholders in the SEC. So it's not a free lunch.
Yeah, but this valuation is so about the future. There's an arrival startup without any revenue. There's just have some contracts to build vehicles to self-driven with some.
And let's pray that those guys can execute.
How?
Let's pray those guys execute, Valentin, because maybe 24, 36 months down the line, if they blow up the business, there are going to be a lot of questions. I mean, right now, the problem also is the media, just overhypes everything. And so I think all the guys have said here, and I agree with them, everybody's got to calm down and also be rational about what they're doing. And most of the guys that control the purse strings in a SPAC that are responsible, right, will understand that. And yes, you can get higher valuations. They bet on the future DCFs, discounted cash flows. But, everyone's got to do it for a reason that's logical.
Yeah,
makes
but
sense.
each company has a better chance to build the future with $200 million or with $20 million.
Yeah, sure.
So this high valuation can become a self-fulfilling prophecy. Right?
It can with the right group. Yeah, it's the group. It's the founders and the entrepreneurs. It's got to be the right fit. I agree with you. If that's the good fit, yes.
Okay.
Wonderful. Well, everyone, thank you very much for sharing your thoughts and insights, and not only on today's topic, but also LATOKEN as well. We definitely appreciate it. And also, I know the audience says comments have been flowing in left and right. So great job, everyone, on, again, today's topic. I want to come around real quick, just a quick shout out as to where everyone can find you online to continue the conversation, as we have another episode here in just a minute or two. So I want to make sure everyone knows where to find you to connect afterwards, and then we're going to jump to the next show. So Ariel, real quick, where can everyone find you online to continue the conversation?
For sure. So anybody can follow me on LinkedIn. There you're going to receive updates, and our team is going to get in touch with you.
Wonderful. Thank you. Kevin.
Sure. Yes, I'm on LinkedIn, Kevin Chen, NYC, Twitter, Clubhouse, Weibo, WeChat, but I don't use Facebook. So
First time I think we've had a Weibo shout out. So thank you very much, Kevin. Giampaolo, where can everyone find you?
Sure.
Yes, you can find me on LinkedIn, Twitter, Instagram. I don't use Facebook. You can find me via email, giampaoloparigi1@gmail.com.
Wonderful. Inshallah.
LinkedIn, Shahal Khan. Thank you so much, guys. Thank you for inviting me today again, and great conversations.
Thank you very much. Last but not least, Valentin, where can everyone find you and the company online to continue the conversation?
Yeah, that's my Facebook or Twitter, so you can send me a kind of your feedback why I should or should not do SPAC. Right? Thank you. Thanks a lot.
Wonderful. Thank you all again very much. A big thank you to the entire LATOKEN team and to Maria for helping to make today's episode of VCTV possible. Join us in just a few minutes as we bring more investors from around the world to break down what's happening in early stage and seed investments globally. I'm your host, Kyle Ellicott. We'll see you back here in just a few minutes. Again, check us out on latoken.com. We'll be right back. Bye, everybody. Thank you.
Thank you. Bye-bye.
Bye, everyone.